Okay, hi, this is Downtown Josh Brown. I'm here with Michael Batnick as usual. We're going to play our favorite game. What are your thoughts? I don't know what Mike's going to ask me about, and he doesn't know what I'm going to ask him about.
Why are you shouting?
I'm so excited. Duncan, hit the music. I want to talk about this thing that Balchunas wrote. So Eric Balchunas is the ETF reporter at Bloomberg, and he did a thing about how this year 1,000 ETFs were killed or put out of their misery by the fund company that had launched them. And there are still 400 to 500 zombie ETFs, that are barely collecting assets around. Should that be like scary to investors if they buy an ETF and it gets shut down? Or should they just say, all right, this one didn't work out, on to the next? Like, how should we feel about that many exchange-traded products dying in 1 year?
I don't really have strong feelings on this. Like, is it it's sort of a non-issue in my mind. Well, like, what do you mean exactly?
I don't know that it's a non-issue if you have a portfolio and you're holding these things.
Nobody has a portfolio of zombie ETFs.
Well, you probably don't have more than one, but everyone probably has a few.
And it's probably a very small piece of your portfolio anyhow.
Right, because they're tiny.
Because they're probably like these niche ETFs, like whatever. Pick something stupid.
So Eric is saying that this is actually an example of the market working and capitalism working in the ETF space. Like, things that should die are put out of their misery, just like any other failing business enterprise or unpopular product.
I'll wait for a billionaire to weigh in before I give my opinion.
A billionaire to weigh in on ETF closures?
On the capitalism in ETF land.
Do you know how many ETFs there are, period?
3,000.
Is that the number?
No, I don't know.
I don't know the number either. We should look into that. All right, what do you got?
So I thought of this question, and then I realized, was this in The Irishman, the question I'm about to ask you? So we had a meeting recently.
We should just talk about The Irishman the entire
We had a meeting recently where the people came 14 minutes early. And I was a little annoyed.
Okay.
So I feel like 5 minutes early is like respectful.
That's not what, in The Irishman, the guy was 15 minutes late.
Right, you're right. Okay, anyhow.
And they were saying like 10 minutes is the max.
Okay, so let's invert that. Let's talk about what's too early. If you're 15 minutes early, isn't that rude?
Well, where are you coming from? If you're coming from the airport, you can get there as early as you want. Like, where are you supposed to go?
Go to a coffee shop. No, you can't. You can get there 2 hours early.
Go sit at, what's that stupid coffee shop on our block?
Blue Bottle.
That's the stupidest. Le Pan Quotidian. Go sit in that hellhole for 20 minutes? What's the difference?
What are you talking about? There's no limit to how early you can come if you're coming from the airport?
All right, there's a limit, but is 15 minutes the limit?
Airport aside.
Is 15 minutes? So if you're 20 minutes early to an appointment, you stay on the street like a schmuck? Like, what are you supposed to do? I don't.
You scroll through Twitter.
Why does it bother you?
Rude.
I know why it bothers
rude.
you. Because you have a glass door next to you and people can see that.
No, whatever. I just think it's rude.
All right.
What do you got?
Student equity. So there's 1.5 trillion in student loans. They take the form of debt. I'm reading almost every day now a new article about what are called income share agreements, or ISAs. Purdue University is at the forefront of this. Basically, they're putting up the ability for students to pay for their tuition in the form of equity from somebody investing in them like a shareholder, and then getting a share of their income later after they graduate. And I want to know your opinion on this from both sides. The first, from the side of the student, is this superior than fixed rate debt? And then from the side of the investor, is this an attractive thing to buy as an alternative to, let's say, a traditional bond or a traditional venture investment even? I don't even know like what you would compare this to. But what are your thoughts from both sides?
Okay, so I will caveat this with, I don't really know much about this, so I'm making this up. So forgive me.
Okay.
I think the professor or somebody from Purdue was on a podcast, Odd Lots maybe? It was on one of them. And I thought it was like, oh, that's an interesting idea. So would I rather give up 2% of my income for 15 years or pay $190,000 for 4 years of tuition?
Yeah.
Probably rather give up my income.
Yeah, so this is
like what's the worst case scenario that you become filthy rich and are giving like
no.
Isn't that a good risk?
So it wouldn't work that way.
Why there's caps?
The schools that are doing this are putting a cap. Okay. One of the schools, it's 2.5 times the total value of what you were lent is the most you could pay back.
Okay.
And then another school is saying that you have to be making a minimum of $50,000 a year before you're obligated to pay anything back.
I love it. So they're not punitive.
So the employer has to wait until like you have your feet underneath you. Not the employer, it's not really a lender, the investor in you. All right, so now from the investment side, let's say you run a family office and you have $500 million to allocate and you have $5 million for some random alternative shit, and you're able to go on a website and select students. You can read about their GPA, their activities.
Well, don't you think it'll be bundled? You're not going to be able to select individual
Not
students.
necessarily. Right now.
Oh my God, student picking is the new stock picking?
Well, right now you could say like, this guy is going to major in something that I think has the ability to pay me back faster. I'll invest in him.
English lit?
You think this is going to be like an interesting category?
Can you short?
Can you short a student?
Well, all right. Again, without knowing anything, I would say
I would have been a good student to short.
It's intriguing. Need to learn more. Okay, my turn.
Fair enough. Go.
Let's talk about the stock market.
Go.
So, notwithstanding
Bullish?
notwithstanding today's plunge,
Yeah.
up 25% year to date.
Yeah.
And I know 1 year returns are blah blah blah, whatever.
30 daily new highs or 25 new highs
just-
this year.
So, if you had to like give a tidy narrative of what happened in 2019, where did these returns come from? What would you say?
The stock market likes when interest rates are headed lower, not higher. I mean, that's just the reality. We can point to all these historical cases where that didn't matter. Right now, it matters. We were in a 20% drawdown a year ago, pretty much next week, and nothing's changed with the economy. We're still growing between 1% and 2%. We still haven't sorted out the thing with China, and we're probably not going to. So what's changed? Well, what's changed is the Fed raised rates 4 times last year and cut 3 times this year.
You think it's that simple?
Yeah. Why overcomplicate it? And some of it is fundamental and some of it is psychological, but it's a potent cocktail. So fundamentally speaking, it takes some pressure off of companies and maybe makes it even easier for them to borrow than they already had it. And then psychologically, people say there's nowhere else to go, et cetera, et cetera. So I don't think we need to come up with this complex narrative. One thing that's interesting is that Europe didn't have a recession this year, and there were people last year saying it's a guarantee if this trade war with China goes on another year, Europe will be in recession. It didn't happen. So I want to ask you in the same vein.
Yes.
I think Goldman Sachs put out something saying the 60-40 portfolio just had its best year since 1998.
Pretty
I think
good.
it's up 20% plus. So that would be 60% S&P 500, 40% Barclays Aggregate Bond Index. So if you did nothing and just adopted the 60-40, you made a fifth more on your portfolio than where we were.
Which, by the way, nobody really owns the 60-40.
Fine, but if you even looked anything close to that, you're happy this year. And most financial advisor portfolios probably look something similar to that. So they're up high teens or low 20s. How many times are we going to write the death of the 60-40 before there's just total capitulation and even the bears say,
Capitulation
you know
on
what,
what?
it's reasonable?
No. What?
Well, they were saying it died last year. Like they seem to never run out of opportunities.
You will never see that headline.
You'll never see somebody say, look, I'm not positive on the economy. I have concerns about debt.
Would you read that?
But the 60-40 is probably okay.
Would you read that?
I'd read the article.
You'll never read that article. I wouldn't read that article. Boring.
So they'll call for it again next year. Doesn't matter.
The Wall Street Journal, the drop in deal activity, talking about buyouts, comes as private equity firms' unspent cash dedicated to North American buyouts reaches a record $771 billion, up nearly 24% since the end of last year.
$750 billion in cash
That needs to be allocated.
that needs to be allocated, or else they have to give it back.
So is this cash on the sidelines bullish for the illiquidity premium? Is it, bearish? What do you think?
What do you do with $750 billion?
Well,
you take Microsoft private? I think.
hold on. On the one hand, you have people saying that valuations are at all-time highs in these private deals, and then you just like, okay, well, this is reasonable. Cash is piling up because they're not being reckless with how they're spending it.
Will they give it back though? There's not a great history of these firms not deploying it.
When the funds wind down, they will.
Well, let me put it to you this way. It's a little bit misleading when you say like a drop off in deal, because it's always against the comp that was a year ago. And you have to go back and look what was going on a year ago.
Well,
and
how
if
about
there
this?
was one massive deal, it skews the comp.
So lower in 2019 than it was in 2015, and like less than half of what it was in 2007.
What's lower, the amount of
U.S.
deals?
buyout deals.
Or the total dollar figure of deals?
U.S. buyout deals, dollar.
Dollar amount.
It was
okay.
$155 billion in 2019 through October. Through October in 2015, it was $234 billion. And in 2007, which is like off the charts, it was $366 billion.
Oh, you think what I'm thinking?
I don't know. What do you think?
Santa Claus rally in private equity? It's a thing.
All right.
The other thing is, we
wait,
don't know.
So wait, do you have any thoughts or not really?
I do. We don't know how long that capital has to be deployed. It's not all one pool of assets. You're talking about probably 100 different funds. And even within those 100 different funds, how many different funds does KKR have out right now? How many different funds does Blackstone have? So it's not like it's $1 amount, there's a clock ticking, they have to throw it at something. This is like a rolling thing. And by the way, the minute one of these things, the period of time to deploy matures or ends, there's another fund raising money. And what's really funny to me, everyone's a contrarian now. What's really funny to me is how many people are raising distressed funds. And they're saying, we're going to hold this in cash until the economy turns, and we're going to invest in distressed. If everyone is ready for a distressed boom, maybe you don't get
What
one.
if this dry powder starts investing in new funds?
What do you mean?
Just what I said.
One fund investing into a new fund?
Just keep rolling it.
Yeah, this is what we need. We need fees on fees. That's all I got for today. You got anything else?
Nope.
All right, listen, we need you to come into the comment section. Let us know what your thoughts are on these topics. We always love hearing from you. We get a good laugh sometimes too. Michael doesn't love it as much as I do. If you're not subscribed, I don't really know what your story is. We're about to break 20,000 subscribers. We love our subs. We put a lot of effort into the channel this year.
Especially
Hope
the
you're
ones,
enjoying it.
especially the people that call me a bald you.
Is that what you got once?
All the time. Once.
Somebody told me I look homeless. All right. Listen, let us know your thoughts. Make sure to subscribe. Go ahead and give us a like. We will be back soon.